Hello everyone, welcome back to my channel after a long gap of a week. Today I am going to give a practical, beginner-friendly understanding of ISO 202 and MX messages for payments. My goal is very simple. By the end of this tutorial, you should be able to look at terms like pen.001, PACS.008, PACS.009, CAMT.54, then app header, UETR, status codes, returns and reports, and understand what role they play in a real payment journey. This session is especially designed for the business analysts, the subject matter experts, testers, operation teams, and the banking learners. So I will explain it from the business point of view first, then try to connect it to the message structure and the project impact. With that, let get started with it. Let us start with the world many payment professionals already know. That is the empty message world, which I have already covered in a previous video. You can go to my channel and search for the empty message video. Okay, empty messages like your MT 103, 202 have served the banking industry for decades. They are compact. They are very familiar and operationally strong. If you understand empty messages, you already have a strong payment foundation. But the industry has changed. Payments are no longer just about moving money from bank A to bank B. Today, banks need richer uh, data, clearer parties, better compliance screening, stronger reconciliation, more automation, and improve transparency across countries and systems. Empty messages are powerful, but in many cases they are compact and tag based. That compactness is useful, but it can limit how much structured business information can be carried. Think of it like writing the full story of a transaction inside a small suitcase. So you can fit a lot, but sometimes you have to fold things awkwardly. So that is empty. In ISO 20022 gives us a richer and more structured model. It allows cleaning. It allows clear meaning for debtor, creditor, agents, amount, remittance, your purpose, and many other payment elements. So this helps systems process data more intelligently instead of depending heavily on the free text interpretation. In short, I will say empty knowledge. Your empty knowledge is still valuable. It makes you operationally strong, but your ISO 20022 knowledge makes you future ready. Okay. Now that we know why the industry moved in this direction, let us define what ISO 20022 really is. A common mistake. A common mistake is to say ISO 20022 means XML format. That answer is not completely wrong, but it is incomplete. It is like saying a bank is only a building. So the building is visible, but the real bank is the processes, right? The real bank is the processes, accounts, rules, controls, and the services behind it. ISO 20022 is a global financial messaging standard. It provides a common methodology to model financial business processes and messages. It also provides a common dictionary. Provides a common dictionary of reusable business components such as debtor, creditor, agent, amount, account, remittance information, so on. The important part is that ISO 20022 focuses on the business meaning first. It asks what is this financial process, who are the parties, what is the transaction, what information must travel with the payment. Only after that does it represent the information in a technical format, most commonly XML. So once you understand this, the topic becomes very easy. We are not learning random text. We are learning business meaning represented in a structured way. Okay, now let us understand why the financial industry needed this upgrade to ISO 20022 from the MT world. So traditional payment messaging has worked well for years, but modern banking created new demands. Banks need to process higher volumes, right? Banks need to process higher volumes, um, support real time, uh, support real time and cross border flows, screen transactions accurately, reconcile faster, and provide more transparency um, to the customers and regulators. Once one problem was your limited remittance detail. For example, a corporate may want to send invoice numbers, purchase order details, or structure references with the payment. If that information is squeezed into free text, downstream system may not understand it consistently. Another problem was inconsistent semantics. Different systems or markets could interpret fields differently when meaning is not clear. Operation team end up doing manual repair, manual investigation, manual reconciliation, and in banking, manual work is sometimes like a mosquito in the bedroom. Some small, but it can keep the entire team awake. While ISO 2022 answers these issues by providing structured information, reusable data components, better support for screening, improve reporting, strong interoperability, and better cross-border transparency. So ISO 20022 is not just a technical file format change; it's a business upgrade, right? It's a business upgrade. It is about better quality data flowing through the payment chain. Now, before we go deeper, we must clarify three terms that are often mixed together: ISO 2022, MX, and CVPR Plus. In banking discussion, people often use ISO 2022, MX, and CVPR Plus as if they all mean the same thing. They are related, but they are not identical. The distinction is very important from business analysis and project team perspective. ISO 2022 is a broader standard. It is the global financial message standard and modeling methodology. It defines the business concepts and the message definitions used across many financial domains. MX is the message shorthand used commonly for ISO 20022 XML based messages, especially in the Swift world. When someone says MX message, they usually mean ISO 20022 XML based messages, such as your PACS, PACS 008, PACS 009, PAIN 001, CAMT 054, right? And then coming to CVPR Plus, CVPR Plus stands for Cross Border Payments and Reporting Plus. It is a set of Swift users guidelines for ISO 20022 messages in cross border payments and reporting. In simple terms, ISO 20022 is a big standard. It's a big standard. MX is the ISO 2022 message style, and CVR Plus tells banks how to use specific MX MX messages for Swift cross-border use cases. If I had to tell it in layman terms, ISO 20022 is your language. MX is your document written in the language of ISO 2022, and CVPR Plus is your exam rule book that says exactly how the answer must be written for a specific purpose. Okay. Now, before we go further, let's look at the MX message families and the format they basically follow. So when learners first see a name like PACS.008, um, or it can look like a banking password created by a tired system architect, but there is a logic behind it. So the naming formula is usually, the business area, message type, variant, and version. So in PACS.008, if we have to take this format as an example, PACS is your business area. 008 is the message type. 001 is your variant, and the last two-digit number is your version. So you can just compare this. PACS 008 is the business area, or it's a family. Message type is basically the second character. Variant is this, and then version is this. Okay, the four-letter family tells you the broad business area. Pain means, for example, pain means your payment initiation. PACS means your payment clearing and settlement. CAMT means cash management. SEMT means account management. Uh, then ADMI relates to your administration or technical messages. RIDA is related to reference data. SCSC, SCT are basically securities related families. So there is no need to memorize every possible message code. Your main job is to decode the name quickly and ask the right question. What happened in the business process? Was the payment initiated? Was it transferred between banks? Was the status sent? Was cash movement reported? So whenever you see MX message name, first decode the family, first decode the family, okay, and then the message type, and then the version, and so that alone removes a lot of confusion in a project discussions. Now that we understood the foundation, right, let us introduce the core MX payment families. Um, with this, we enter the practical world of MX messages. So the first thing to understand is that message names are not random. The first four letter basically usually identify the business family, as we have discussed in the previous slide. Here PAIN stands for your payment initiation. So these messages are usually customer to bank or initiation site messages, right? Think of a corporate sending a payment file to its bank, or a channel sending an instruction into the bank. Pain.001 Pain.001 is the classic example of customer credit transfer initiation, and Pain.002 is a customer payment status report. PACS stands for your payments clearing and settlement. These messages are used between financial institutions um, and market infrastructure. They include the customer credit transfers, your financial institution transfer, status messages, returns. Okay, PACS.008 and PACS.009 are major examples. Then CAMT stands for your cash management and reporting. These messages are used for reporting, statements, notifications, account entries, etc. So CAMT 052, CAMT 053, CAMT 054 are common examples of CAMT messages. To remember it quickly, pain basically starts the payment. So you remember it is an initiator. PACS moves or manages the interbank payment. So it basically related to moving, settling status and return. And CAMT reports what happened on the account side. So it is basically related to report. Okay. Now let us shortlist the core MX messages every payment domain learner should recognize. So you do not need to know every ISO 20022 messages in the universe. Start with the message that appear repeatedly in the payment projects. You will see pain.001. It's a customer credit transfer initiation. In plain language, a customer or corporate instructs a bank to make a payment. This is often seen in a corporate payment files, salary payments, supply payments, or treasury payments. Then we have the pain.002, which is customer payment status report. It gives feedback on initiation side processing. For example, the file may be accepted, rejected, or partially accepted. Important point to note is pain.002 is not same as PACS.002. Okay. Then PACS.008 is FI to FI customer credit transfer. If it carries a customer credit transfer between financial institutions. Conceptually, many people connect it with MT103. So this is equivalent to MT103 in the MT world. Okay. Then PACS.009. This is FI credit transfer. It is used for FI to FI transfer, bank to bank transfers, cover or settlement related movements. People often connect it with conceptually with MT202 in the MT world. It could be MT202 serial or MT202 cover scenarios depending on the use case. PACS.002 is the FI to FI status report. PACS.004 is for payment return, meaning funds may have moved and now need to come back. CAMT 052 is for reporting, CAMT 053 is for statement, and CAMT 054 is for notifications, debit credit notification. Together these messages form the practical backbone of many ISO 20022 payment discussions. Now, before going into each message, let us understand the common structure used inside the MX messages. So, most MX messages follow a recognizable structure. Once you understand this structure, reading XML becomes much easier. You do not have to read every tag like a developer. You need to recognize the business blocks. So, at the top, there is usually the document wrapper. This is the outer container. This is the outer container around the ISO 20022 business message. Inside that, you will find the specific business message type. So inside below document it is message type. For example, text.008, the main body is FI to FI customer credit transfer. For that simply means the financial institution to financial institution customer credit transfer. Inside the business message, there is usually the group header. Inside the message, you will see the group header. The group header contains your message level control information, such as the message ID, the creation date and time, the number of transactions, settlement information, and sometimes totals. Then there is a transaction or action section. This is where your actual payment details live. So it contains the payment instruction, identifiers, parties, agents, amounts, charges, remittance information, your account entries or status details depending on the message type. So remember the pattern. So outer wrapper is your business message, outer wrapper business message body, group header, and the business detail. So once you see this pattern, XML becomes less like jungle and more like a well leveled warehouse. So okay, now let us make XML less frightening with a simple reading approach. Let me tell this clearly. So as a BA or tester or a operations SME, you do not need to become a full-time XML developer. Okay, but you must be able to read the structure and understand what the message is trying to say. Okay. Now XML uses tags. So these are basically tag. Okay. A tag opens. This is the opening tag. Contains information. It will contain information and closes. So this is the closing tag. You can see the slash. Now think of each tag as a level container. For example, document is the outer container. This is the outer container. Then the FI to FI customer credit transfer tells us this is an FI to FI customer credit transfer. Group header gives you the message level header details. Credit transfer transaction information gives credit transfer transaction details. Nested tag shows your hierarchy. This nested tag shows your hierarchy. For example, data information contains okay, these are nested tags basically. Data information contains may contain name and amount, name and account. Data agent may contain financial institution identification such as big. This nesting helps systems understand exactly what each piece of data means. The practical rule is read from outside to inside. This is outside, and more you go downwards, you go to the inside. First, identify the message type. Okay, then identify the group header. Then identify the transaction blocks. Then look for your identifiers, amount, parties, and so on. If you can do that, you can participate confidently in mapping discussions, in defect analysis and UAT validation without pretending to be a developer. Okay. Now let us look at two areas learners often confuse. That is a group header and transaction information. Now this is one of the most important patterns in MX messages. Um, Group header and transaction information are not the same thing. Group header is about the message as a whole. Group header is about a message as a whole. It may contain your message ID, creation date and time, number of transactions, control totals, and settlement information. Think of it like the cover page of a payment file. So it's like a cover page of a payment file or a message package. Now transaction information is about the actual payment or the business item. It contains your payment identifiers, your debtor, creditor accounts, debtor account, creditor account, your remittance informations, currency informations, other payment specific details. One message can have one message can have only one group header and one or more one or many transaction sections depending on the message type and users guidelines. So one say for example one PACS 008 will have one group header, but it could have n number of transaction information depending upon the use cases. So if you see group header, think about control and message level information. If you see transaction information, think actual payment details. This knowledge matters in testing. So if a defect comes, if a defect says the wrong amount is present, you must know whether the issue is in control, is in a control total or in the actual transaction amount. Otherwise, everyone spends 1 hour arguing, and then someone finally says, "Oh, we were looking at the different text." Okay, now let us look at how ISO 20022 makes party rules clear. So payment messages are not only about amount and currency; they are also about people, companies, and banks playing different roles in the payment chain. The debtor. The debtor is the payer or customer whose account is debited. The debtor agent is usually the debtor's bank. The creditor is the beneficiary who is going to receive the money. The creditor agent is the beneficiary's bank. Depending on the route, there may also be intermediary agents. ISO 20022 also supports additional clarity through roles such as ultimate debtor or ultimate creditor and initiating party. For example, a parent company may initiate a payment on behalf of a subsidiary, or a payment service provider may send instruction on behalf of an end customer. Why is this useful? Because routing becomes clear. So compliance screening improves because party identification is more precise. Investigations become easier because the sign of parties is more explicit. Reconciliation improves because downstream systems can use specific fields rather than guessing from free text. For BS, the key recommend principle is preserve roles end to end. Do not flatten the rich party data into one free text field unless the target system truly cannot support structured format. Once a structure is lost, downstream systems or downstream teams have to pay for it later. Okay. So along with party roles, identifiers and references are also the backbone of the traceability. So in any payment project, one of the first questions as a BA or SME should ask is what reference helps us track this transaction. Payment without good reference are like parcels without tracking numbers. So technically they may move, but everyone gets nervous. So message ID is usually the message level identifier. It helps identify the file or the message. Your instruction ID is an instruction identifier and often helps identify the instruction created by the sending party or system. Your end-to-end ID is especially important because it is intended to travel end-to-end as a customer or business reference. In this case, UETR plays a big role. UETR is actually unique end-to-end transaction reference, which is used strongly in payment tracking, especially in Swift GPI and cross-border context. It's a UUID style reference that helps track a payment across a chain. There are also status-related references. When a status message comes back, it must map to the original instructions or transaction. Otherwise, the receiving system may know that something was rejected, but not know exactly which payment it belongs to. This is where a strong reference mapping becomes critical. For requirements and testing, always ask which ID. Okay, which ID is generated by what system? Which ID is mandatory? Which ID must remain unchanged? Which ID is used by operations, investigations, customer servicing, and reconciliation? These questions prevent many production issues in the later time. Let us discuss one of the biggest practical advantages of using ISO 20022 format, that is a structured data. So ISO 20022 is not valuable only because it uses a modern format. The real value comes due to the structured format of the data. In unstructured data, information may be written in one free text line. For such as your here you can see ABC Imports Limited, Mumbai, India. Then it may also have some pin code 1 2 3 4 5 6. Humans may understand it after reading carefully, right? We can understand it reading carefully, but systems may struggle. Is 1 2 3 4 5 6 this particular code an account number, a customer ID, or an invoice number or billing number? The system does not have common sense like us. It has rules. Okay, but in structured data, the same information is separated into meaningful fields such as your name, town, country, account, and so on. This makes screening, um, this makes screening, uh, reconciliations, reporting, automations, analytics easier. So better party identification improves sanctions and ML screening. Okay, clearer remittance information improves reconciliation. Defined address fields improve your data quality and regulatory reporting. Fewer assumptions mean fewer repair cases and stronger STP potential. STP means straight through processing potential. So structured data is not an IT decoration; it's a business benefit. It reduces the ambiguity, and in banking, ambiguity is very expensive. Now let's connect the richer data with the remittance, STP and automation. So one of the most visible business benefits of ISO 20022 is better remittance information. Remittance means the information that explains why a payment is being made. For example, invoice references, purchase order, uh, then your customer reference, payment purpose, or account linkage. For corporates, this is extremely valuable. Remittance information is extremely valuable. Um, so you imagine thousands of payments and then manually typing to match each payment to an invoice. That is not a finance operations task. That's a daily treasure hunt. With richer and more structured remittance data, companies can reduce unmatched items, reduce manual reconciliation, um, improve ERP posting, and understand payment regions more clearly. This supports your straight through processing um, and automation. However, ISO 20022 does not magically guarantee automation. The data must be captured correctly upstream, okay, preserved through the payment chain, and consumed properly downstream. If one system captures rich information and another system flattens it into free text, the benefits is reduced. So as a BA, you must focus to define what remittance information is required, where it comes from, whether structured and unstructured options are allowed, how much data downstream system can support, and how reconciliation will use it. Okay. Now we move into specific MX messages one by one, starting with the customer initiation and customer side status. Pain.001 and Pain.002. They live mainly on the customer to bank or the initiation side. Okay, they live on the initiation. Let me just repeat it. Initiation side. They are specifically relevant when corporates, channels, or upstream system send payment instructions to bank. Pain.001 is customer credit transfer initiation. In simple language, the customer or corporate is telling the bank or instructing the bank, please make this payment. It may contain one transaction or many transactions. Common examples include your salary payments, supply payments, vendor payments, and treasury payments. The bank receives the instructions and performs the validations such as format check, mandatory field checks, account validation, limits, sanction screening, and business rule validation depending on the process. Pain.002 is customer payment status report. It provides feedback to the customer or initiating system. For example, the file may be accepted um, or rejected or partially accepted or still under process or still be under processing state. This is very important when one batch contains many payment. Okay. Pain.002 does not always mean final settlement has happened. It is just a feedback on the initiation or to the initiation side processing. Also, Pain.002 is not the same as PACS.002. We will compare them shortly. After initiation, the interbank customer credit transfer is commonly represented by the PACS.008. So PACS.008 is one of the most important messages in ISO 2002 payment discussions. It is a FI to FI customer credit transfer. In simple words, it carries customer credit transfer between the banks, between the financial institution. If you know the MT word, you can conceptually think of PACS .008 as an MX era bridge from MT 103. But be careful, it is not always the same. It's not always a simple one-to-one copy of MT 103. Real mappings depend on the usage guidelines, your market practice, then the network rules and the product design. In a typical scenario, a corporate or customer needs to pay a beneficiary, right? The debtor bank sends the customer credit transfer through a payment chain. The beneficiary ultimately receives the fund through the creditor bank. So PACS.008 carries the group header, the payment identifier, amount, settlement amount, debtor information charges, creditor information, creditor agent, remittance information, and references. For BAs and testers, PACS.008 is a must know message because it connects the customer instruction, interbank movement compliance screening, charges, remittance, reconciliation, and investigation use cases. Let us now zoom into the key business sections of a PACS.008. So when reading a PACS.008, do not start trying to memorize every XML tag. Start by recognizing the major business section. The message body is FI to FI customer credit transfer. This tells us that this is an FI to FI customer credit transfer. Inside it, we have the group header. Group header gives the message level control information. Then we have the creditor transaction information, and this gives a credit transfer transaction information. Inside the transaction information, look for payment ID. This is where identifiers such as instruction ID, end-to-end ID, UETR may appear. Then this references help track the transaction and link related messages. Then look for interbank settlement amount. This which is the interbank settlement amount actually. Look for debtor and creditor details. Debtor details, creditor details, debtor agent, creditor agent, remittance information, and so on. So for a simple reading technique, ask 5 questions. What message is this? What message is this? What references identifies it? What amount is being settled? Who are the parties and banks? What remittance explains the payment? If you can answer this, you have understood the business meaning of the message. Now let us compare this with PACS.009, which is about FI credit transfer. Now PACS.009 is a financial institution credit transfer message. Unlike PACS.008, which carries a customer credit transfer, PACS.009 is used for FI to FI transfer. Settlement related movement, cover style movement, or bank to bank funding scenarios depending upon the context. In the MT world, people often compare PACS.009 conceptually with MT202. In certain cases involving cover logic, people also discuss MT202 cover. MT202 cover. But again, do not treat this as a blind one-to-one mapping. This exact usage depends on the guideline and the business scenario. The key distinction is that PACS.008 is customer credit transfer logic, and PACS.009 is financial institution credit transfer. If you confuse the two, the payment design and testing can go in the wrong direction very quickly. In correspondent banking, PACS.009 can be used where the movement is between the financial institution. It may support cover. Okay, PACS.009 may support cover or settlement flows connected to the customer payment path. This is why BAs must ask whether a message represents a customer payment lag, uh, the cover lag, the settlement lag, or an internal financial institution movement. A simple way to remember it is, uh, let me just write it. PACS.008 carries the customer payment story, whereas PACS.009 carries your bank to bank money movement story. Okay. Okay, now let us clear up a very common confusion between pain.002 and pax.002. Now both pain.002 and pax.002 are status messages. Okay, they are both status messages, but they are used in different location and different audience and for different audiences. This distinction is very important in the projects and interviews. Pain.002 is your customer payment status report. It sits on the initiation side or customer to bank side. It tells the customer or payment channel or corporate whether the submitted instruction or filed was accepted, rejected, or partially accepted, or is under processing. Whereas PAX.002 is a FI to FI payment status report. It sits in the interbank chain. It communicates status between financial institutions or market participants. So there is no involvement of non-banking institutions. For example, it can indicate whether a PAX.008 or PAX.009 was accepted, rejected, um, or pending based on interbank processing rules. The audience is different. The audience is different for both Pain.002 and PAX.002. Pain.002 talks back to the customer or initiating party, whereas PAX.002 talks between the FI to FI chain. The context is different, the references are different, and the operational interpretations are also different. Um, Now let us discuss what happens when the money has moved but must come back. That is the return. PAX.004. PAX.004 is a payment return message. The key idea is that a return is not the same as a rejection. A rejection usually happens before the payment is executed or settled. A return is commonly used when the original payment has been processed or settled, but funds need to come back. For example, the original payment was executed, later an issue was found, maybe the beneficiary account cannot be credited, maybe the wrong beneficiary details were discovered after settlement, maybe there is a regulatory or operational reason why the funds must be returned. In that case, the return of funds logic is triggered. Okay. um, the return must refer to the original payment so that the so that the systems and operation teams can understand what is being returned and why. For BS, this is a very important recommend area. You must document when to reject. You must document when to reject, when to return, and when to trigger a cancellation or investigation. You must also define how original um, references are linked and which region codes are used, what accounting entries are created, and how the customer is notified. Okay. um, Now do not mix return with your rejection and cancellation casually. In payments, these are not just English words, these are different business events. So your return is a business event. Rejection, cancellation, this all three are different business events. They are not same. Okay. So after payments move, account reporting becomes important. This is where CAMT messages come to the picture. CAMT messages belong to the cash management facility. They are used for account reporting, statements, or debit credit notification. This is where payment execution becomes visible as account movement and reconciliation evidence. CAMT 052 is often used for your account report, commonly intraday style visibility. It helps show account movements during the day. Okay. CAMT 053 is commonly used for account statements. You can conceptually connect it with the statement reporting in the older MT word, such as MT 940 and MT 950, depending on the market and the usage context. CAMT 054 is bank to customer debit credit notification. It tells the customer or receiving system that a debit or credit entry has been posted or notified. In MT world, this is equivalent to MT 900 and 910. For operations, treasury, corporate ERP, and reconciliation teams, CAMT messages are very essential. They connect the payment world to the cash visibility, accounting, ledger posting, and reconciliation processes. Now, as we have gone through the important messages, now let us try to read a simplified PACS .008 simple message. Do not worry about memorizing every line. Focus on how to read the business meaning. So at the top, you see the document. The document namespace tells us the ISO 20022 message definition. Then FI to FI customer credit transfer. Then this is the business message body. Now inside it we have the group header. Inside group header we see fields like message ID, um, creation date time, number of transactions, settlement information. These are message level controls. So these few fields are message level controls. Message ID basically identifies your message. Creation date time basically tells when it was created. Number of transactions tells the number of transactions, and settlement method basically tells how the settlement is expected to happen. Now there are multiple settlement methods. Basically, we will see this settlement method in a upcoming video session or in a different video sessions, separate video sessions. Inside the transaction section, we see then we have the transaction section. Inside transaction section, we see payment ID with your instruction ID, end-to-end ID, your UETR. So these references help to link and track the payment. These are used for your tracking purpose. Then we see interbank settlement amount. Okay. Then we see the charge bearer. How the charge will be borne by the payer and the pay. Then we have the debtor agent, creditor and creditor account information. In business terms, this identifies who is paying, which bank is sending, which bank is receiving, and who the beneficiary is. Remittance information explains the reason for your payment, such as an invoice or service payment. As a BA, you must focus on to validate the mapping from MT to from the MT fields such as ordering customer, beneficiary, value date, creation, currency amount, surges into the correct ISO 2002 fields. Common mistakes committed are do not call this customer initiation do not call this the customer initiation site or customer initiation file. Customer initiation is paint.001. This is PACS.008. This is the interbank customer credit transfer. Also remember that this sample is just for illustration. Actual usage depends on the ISO version, and your CBPR plus usage guidelines and your market guidelines. Now let's look at the simplified PACS.009 sample. The message body is FI, financial institution credit transfer. This tells us immediately that this is not the same as a customer credit transfer as we have seen in PACS.008. Then we have group header. This is again message level information such as your message ID, creation date time, number of transactions, and a settlement information. This pattern should now feel familiar as we have seen in PACS.008. Inside the transaction details, which comes under this particular block, inside the transaction details, we again find payment identifiers. Okay, like instruction ID, end-to-end ID, UETR. However, the business context is different. This is about FI to FI movement, cover excel payment, or settlement related movement depending on the scenario. The amount shows the interbank settlement amount. The agents and the financial institution identification field tells us which banks are involved in the movement, and remittance may describe the FI funding on cover leg. The key difference is this: the PACS.008 carries the customer credit transfer details, and PACS.009 will carry the FI credit transfer details. In a cover scenario, both may be conceptually related, but they serve different purposes. As a BA, always ask whether this is the customer leg or cover leg, settlement leg, or simply internal FI movement. That answer decides the message type, required fields, references, controls, testing scenarios, and operational outcome. Again, this sample is illustrative. Real usage will depend on the relevant ISO versions and the usage guidelines. Okay. Now we move to a sample CAMT 054, which is bank to customer debit credit notification. This message is not used to move funds between banks. It's just used for reporting or notifying an account movement. The message body, which is bank to customer debit credit notification, tells us this is a bank to customer debit credit notification. The group header identifies the notification message and the creation that time. The account section tells us which account is being notified. Then the entry section shows the amount, currency, debit or credit indicator, status and booking date. For example, CRDT. This CRDT means credit, and BWK indicates booked status in the simplified sample. Inside transaction details, references such as end-to-end ID can help link the notification back to the original payment or invoice. Remittance information can explain the business reason for the credit or debit. A simple rule to memorize is CAMT.0052 reports account activity, CAMT.0053 provides statement style information, CAMT.0054 notifies debit or credit entries. For CAMT.054, think something has hit the account and the bank is notifying the customer system. For BA to focus, do not treat CAMT 054 blindly as a final proof without understanding the timing, booking status, the timing, the booking status, the source system, and reconciliation rules. Okay, It is a notification, and its interpretation depends on how the bank and customer systems use it. Now let us connect everything into a practical end-to-end flow. A customer or corporate creates a payment instruction. That instruction may come from an ERP or channel or host to host file. This is the pain.001 world. The debtor bank receives the instruction and performs the processing, that is your validation, screening, enrichment, limit check, account check, and routing decisions. The bank may send the bank may send pain.002 status back to the customer or the initiating site. The bank may send pain.002. Once the payment moves into the interbank world, PACS messages appear as PACS.008. It carries the customer credit transfer between financial institution. Then PACS.002 may communicate the interbank status. PACS.004 may support your return logic. PACS.009 may support FI movement, cover or settlement related scenarios depending on the flow. The clearing or the settlement layer moves value according to the payment scheme, correspondent chain or market infrastructure. After that, account reporting and notification appear through your CAMT messages, such as CAMT 052, 053 or 054. The simple journey is that initiates pain basically initiates, then PACS comes to the picture. PACS moves or manages the interbank movement. Then CAMT basically reports an account reports the account movement or notifies the system. So once you remember this, the message family becomes much easier to place in real projects. Now let us distinguish four flows that are often mixed up. There is a status, cover, return, and reporting flows. Many payment projects become confusing because teams mix status, cover, return, and reporting. They sound related, but they answer different business questions. A status flow answers what is the processing status of the instruction or payment. For example, a PACS.002 may be sent when a receiver validates or rejects a message and communicates the outcome to a prior institution. A cover or FI transfer flow answers how is bank to bank or settlement related movement happening. This may be conceptually linked to a customer payment, but is not the same as the customer credit transfer itself. Return flow answers what happens when the original credit transfer has been settled or processed, but funds need to come back because an issue was found. This is where your PACS.004 logic becomes important. A reporting flow answers what account entries or debit credit notifications are visible after processing. This is where your CAMT message come to the picture. So as a BA, you must be able to classify the business role first. Okay, you must be able to classify the business role first. Is this status? Is this a cover, return, or reporting? If you classify the flow correctly, selecting the message type and designing the requirements becomes much easier. Now let us look at where ISO 20022 touches the system architecture. So ISO 20022 is not just a gateway change; it affects the full payment architecture. If a project treats it only as a message conversion exercise at the edge, it may miss the real value and create hidden defects. So starting with a channel or the ERP system, they must capture the right data. Right data in the sense they must capture debtor, creditor, accounts, addresses, remittance, purpose, and references were required. If the channel only captures all free text data, the downstream ISO message cannot magically become rich and structured. Then comes the payment hub. Payment hub does the validation, mapping, enrichment, and routing of the messages. It must align the canonical data model, support the MTMX internal mappings, apply routing specific rules, and preserve required references. Compliance system screen and monitor the payment. They rely on clear party data, address information, country details, and transaction context. Swift, FinPlus, or domestic networks access the MX messages according to the network and the scheme rules. The ledger post the accounting outcomes. The reporting and analytics system consume the CAMT messages or downstream data for statements, notifications, and reconciliation. So, if in short, the message journey touches the channels, the hubs, the compliance, network connectivity, ledger, operations, and the customer servicing. So, as a BA, make sure structured information is preserved through the chain. So, every time data is flattened, truncated, or transformed incorrectly, someone downstream will lose the visibility. Okay, beyond the architecture, ISO 20022 also matters for your compliance and interoperability. Banks care about ISO 20022 not only because the industry told them to migrate, they care because rich structured um, they care because the rich structured data can improve your compliance, monitoring, interoperability, and customer outcomes. For compliance, clearer party identification uh, helps sanction screening, right? It helps better AML analysis. Um, Structured name, address, country, and party role information can reduce ambiguity. Chain transparency improves your investigations, because banks can better understand who is involved in the payment. For interoperability, ISO 2002 helps different communities align more closely. It is used across your domestic payments, high value payments, cross border payments, SWIFT payments, and corporate to bank channels. But implementation depends on the relevant guideline. This is important. Um, the ISO 2022 standard allows switches. CBR Plus controls Swift cross-border Swift uses. SVPS Plus aligns high-value payment system practices. Domestic schemes and market practices may define their own rules. So, two ISO 20022 implementation may not be identical. ISO 2002, for example, implementation in India may not be identical with ISO 20022 implementation in UK because of this usage guidelines. So in real projects, you implement a standard plus usage guidelines plus local business rules. That is why a BA must read the message specifications, market practice, network validation rules, and the system mapping documents together. Finally, let's discuss the migration and coexistence for a bit, because format conversion alone is not the first line. ISO 20022 migration is practical yet not magical. During migration windows, MTMX environments may coexist. Banks may need translation from MT to MX or MX to MT. Translation helps between helps continuity. Basically, it can introduce representation limits and dependencies on non-native processing. For example, if reach ISO 20022 Data must be translated into a legacy empty format. Some data may be truncated, mapped into less precise fields, or carried in a way that downstream systems do not fully understand. This is why coexistence requires strong controls and careful testing. Data quality readiness is the major theme. Channels and upstream system must capture structured data, not just old free text information. Master data, customer onboarding, address quality, account data, big data, purpose codes, and remittance fields may all become important. The full benefit of ISO 20022 comes when the bank adopts a structured data format. When the bank adopts structured data format natively across the chain, capture, validation, mapping, screening, routing, posting, reporting, analytics. So the message to protect teams is simple. Message to project team is very simple. Do not celebrate only because the XML file was produced. Celebrate when the right business data was captured, preserved, validated, consumed, and used to create better automation, compliance, and customer service. So this brings us to the end of this ISO 2022 and MX message learning uh, module or video. Thank you for watching and learning with me. Keep practicing by reading sample messages. Start with the message name, then identify the group header, references, amount, parties, agents, and remittance. Do not try to memorize everything at once. Payment learning is like gym training. Once PACS.008 one PACS.008 a day keeps the confusion away. So just think it like that one. If you have questions about ISO 20022, M3MX mapping, PACS.008, PACS.009, CAMT message, or payment in basic or anything, write them in the comments. I will try to cover them in future tutorials. Thanks again. I will see you in the next video.